good morning, and welcome to another edition of Macro Now, set to be released every Monday morning. Today is January 11th, 2021. My name is Alexander Turro, Senior Market Strategist here at RGO Futures, where we contextualize the rates of change of growth and inflation, not only here domestically, but globally as well within the context of the prior week. So with that said, we'll start with the global currency market. You had the US dollar index continue to break down, up 0.2% on the week last week, but is now down minus 3.7% in the last 3 months alone, and continues to signal bearish trends since June, where it has now been devalued over 10%. You have the euro versus the US dollar flat on the week last week, up 0.0%, but is now up 0.9% in the last month, and it continues to signal bullish on both a 15-day as well as a 90-day trend duration. And if you take a look at the Canadian dollar, that was up 0.3% versus the US dollar last week, but it's now up 1.6% and 4.9% in the last 1 and 3 months respectively. Which now brings us to interest rates. You have the 10-year yield continue to ramp up higher, plus 20 basis points last week, taking its 3-month gain now to 33 basis points. With the other side of that, gold now down minus 2.6% last week, and is now down minus 1.2 and minus 2.4 in the last 1 and 3 months respectively. That's certainly a product of real rates going less negative and the yield curve steepening now 35 basis points in the last 3 months alone. As you want to continue to short deflation and duration rate sensitivity, as you take a look at some of these U.S. equity sector styles like utilities, UTs, those were down minus 0.6% last week to now down minus 1.8% in the last 3 months, and REITs now down minus 2.5% last week to now minus 3.7% in the last 3 months alone, which now takes us to international and emerging market equity longs. Taking a look at emerging markets, the MSCI index, that was up another 4.8% last week to now plus 21.1% in the last 3 months alone. And you take a look at the Kospi, South Korea, that just continues to go vertical, up another 10.4% last week to now plus 36.9% in the last 3 months alone. And you certainly inflation expectations continue to broaden. If you take a look at the CRB index, that was up plus 3.3% last week to a new cycle high now of up plus 42% from where it went bullish back in June. And if you break that down, take a look at something like soybeans, that inflated 4.9% last week to now plus 19.4 and 34.4% in the last 1 and 3 months respectively. And just taking a noting on copper here, up 20.7% in the last 3 months, and WTI oil up 24.0% in the last 3 months alone as well. So with that, that's all we have for you today. If you have any questions or would like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head up out there.